Hey guys, this is Ziggy. Sunday, August 4th of 2024, weekly forecast for natural gas. I got a lot to unpack, so without any further delay, let's get into it. So, this is my spectrum cycle analysis on natural gas NG closes, and I'm using data from 2001 all the way to current prices right now. And one cycle that really sticks out on the weekly chart is this 229. I'm using all the data here. And this is the one I've been kind of leaning on. I used one that was 143, but that didn't pan out. If you want to get a glimpse of what that looked like, it was pretty much around here. You can see that natural gas just continue going sideways to lower. But the 229 seems very promising, especially here that we made this low. And this cycle goes up. And this is going to fluctuate, but as of right now, June 2026. And down here, if you notice, this is the dominant cycle. And that one is 26. If I open this up, you can see that we are right at the sweet spot now. This is a little fractal compared to the bigger cycles, and we're right at that sweet spot where I believe, looking at all the other things that I look at using Gann theory and everything, there's a high probability that this could turn right here, and we could ride this at least up to, I don't know, maybe November, maybe October. I'll show you some data where it says that, it could top out somewhere in August, somewhere in September, October. This one goes all the way to between October and November. So these are the two cycles on the weekly that I'm looking at. The weekly one is up. The dominant cycle on the weekly just hit a trough low, and now that's going up. So it's going to be in sync with the 229 cycle on the weekly using the max data from 2001. So now let's look at the daily chart to see what the daily is telling us there. So this is the daily chart, and I'm using 5 years. So pretty much from July 2017 to current prices right now. I'm just focusing on this area. And there is two things I'm noticing. There is one cycle, which is 250, not 253. That one doesn't look promising to me. The one that I'm leaning on is the 334 using a 5-year data. And as you can see, we opened this up. We got the peak here. We got that April 14 low. Remember that? And somewhere around here, we got our October. It came in a little later compared to here. October 27 high was here, right? Somewhere around there. And then we got our February 20 low. We spiked up here, and now we're at the sweet spot where this cycle has bottom, hit a trough around July 17, and now the daily cycle is up. This one down here is the dominant cycle, and this one hit a trough somewhere around July the 20th, and now this one goes up. So they are in sync, and as you can see, nat gas has just been selling off. The dominant cycle, which is 76, hits a peak around August 26. And this one continues somewhat into the future, maybe January-ish, around there of 2025. So that's what the daily cycle is showing there. Let's look at some seasonalities to get some clues to see what nat gas could probably do in August. So this is a seasonality on nat gas, and I'm going to show you what I'm seeing. So we're using, let's see, 5 years. 5 years worth of data on nat gas. Percent of months in which nat gas closed higher than it opened from 2020 to 2024. And you can see that August has a nice bump, and then it just kind of flat, and then November it drops, and that's using 5 years. If we go into 10 years, you can see that July, which is reflecting the price action we have now, and even already creeping into August, 4th, and it's around, $1.99, 96, hovering around there. We've been, weak in July. But August gets a nice little bump. And, September is above the 50%, so it's a little, on the higher end. And then somehow in November and December, it turns weak. Using 15 years of data, same thing. July weak. August gets a nice bump. And then, you could lean into September, October. These are the two, months where you could probably think maybe there could be a possible high or swing high or top. And then November is just flat. And then December is like very weak. And then using the max of 20 years, you can see that July still. So July remains the month to be accumulating. But so far, there hasn't been a turn in July. And we're already in August, and we're still, kissing around $2 and $1.98, $1.96, $1.99, hovering around there. So if this is going to play out regards to seasonality, not statistically, seasonality wise, this is what's indicating a bump into August, using 20 years, even sideways to higher into September. And lastly, October. And then you've noticed that November and December become weak on natural gas. So this is another seasonality chart I like to watch. So far we at minus 23.15% year to date on nat gas. And I'm going to show you the 5-year average, what nat gas normally does, using a 5-year average. And this is where my first trade happened. It was somewhere around here. I was kind of leaning maybe this could play out. But as you can see, the Black Widow, when she wants to play mind games on us and tricks, she'll fake us out, and the bears come and they push it lower. And, demand wasn't really great. Normally this is what she normally does. But she's doing this now. So this is where I did my first trade, somewhere around there, and that failed. So I always recommend put your stops, because sometimes, the analysis looks promising, but we're dealing with probabilities. We're trying to, play the edge of, what could possibly play out, instead of just placing trades and not even knowing, if we have any edge or leaning or have any kind of, backup of what could possibly play out. But this didn't play out for me, so I just kept watching it going down, and now we're here. So you can see that nat gas goes up, hits a peak somewhere around July 23rd, and then pulls back very close to that, 31st, August 1st, and then it gets this nice bump into August. And this is what I'm leaning now again to see if this plays out. So, I traded here, it failed. I'm going to see if I could try to do this again to see if this fails. And if it doesn't, then, nat gas is going to do what she's going to do. Either go sideways or continue going lower, or maybe kiss 152 low. I don't know. Maybe go even lower to 144. I don't know. Nat gas is, the Black Widow is the Black Widow. She wants to do what she wants to do. So we just got to follow price action. But this is what I'm kind of leaning on, what could possibly play out. If we add our 10-year average, which is the green line, it's kind of, there's some correlation there on the 5-year, and they get the same dip, but something happens around August, that first week where things, gets interesting. And, could it be the weather? Could it be, hurricane season? I don't know what it is, demand, but it's very short-lived if you look at it. Because sometimes it peaks out in August, sometimes September, October. You can start noticing November, she starts dying out, and the Black Widow then starts coming back and starts going back down again. So you just kind of have to, manage your risk and get some targets and see what you could squeeze out of her. But that's what she typically does, as on average. And then from here, using a 15-year average, she's kind of grinding higher, but sideways, and somehow peaks around August 29th on average. She peaks out early on the August 27th, 15-year average. Around August 29th on the 5 and 10, she normally kind of peaks out there. So this is what I'm leaning on right here. And we have to watch price action like a hawk. Statistically, well, I'll talk about the statistical calendar to back up this thesis. So we're going to move on to the next clip, and I'll keep showing you some data that I'm noticing in regards to nat gas. Okay, so this is my Elliott wave chart. This is more for the Elliott wave guys. Let's get this out of here. So as of now, even with all this price action, we still have a 1, 2, 3. That was our June 11th high. We got 1, 2, 3, 4. A, B, C into a wave 4 right here. And always remember, there's a gap fill. I'm leaning, I'm 50-50. It's either gonna fill it. It's gonna be maybe like a quick capitulation thing, where it could just go boom, we'll hit 184 and then just bounce really quick and just be like, okay, we got it done. It's official. Gap fill is filled, and then maybe continue going higher, or maybe not fill it and go from here. And in the future, maybe November, where it gets weak in December, maybe come down here and visit. I don't know. I'm mixed on that. But I would like for it to get filled, because that way we're done with that. But, it's not what I want. It's what the Black Widow wants to do. So this is our Elliott wave count. In regards to our PTI, which is our profit ticket index, it's very low. It's supposed to be around 135, 36, and it's very low. So that means that, there's a low probability that it'll turn here, but that's using this indicator. It could be, it could be right, it could be wrong. Looking at our Stokes, very oversold, and now we're getting our black line indicating that now we're in that range where it's just a matter of time where it starts turning and starts grinding higher into August. And I already showed you all the data where it indicates that natural gas could probably start trending higher in this time zone, in this cluster area in regards to time. But we have to make price action, the Black Widow make higher highs and higher lows. And all the data, the cycles backing it up, the seasonality is backing it up. Wave 4, so wave 5 coming up, so there's a lot of things here. Or if you want to look at it as a 1, 2, and then 3, it's all the way you want to look at it. So those are the things that I have my eyes on. A couple of things. We need to break above this trend line, and we need to close above this displaced DMA moving average. I have what I call the ellipse technique, where this could be a possible target where it just kind of goes sideways and stall. I could even open this up really good here just to kind of see. So it's anywhere between this area of 193 and 195, and this is one of the FT levels that I've been watching. If you look at my Thinkorswim, this is a DNA level of nat gas. And then in regards to high volatility, you got the AIF that you got to watch. So we know on the 7th there's a report coming out. I think the 7th is Thursday, if I'm not wrong. So just speculating, maybe the numbers come out good this Thursday. Friday, I think that's the 8th, if I'm not mistaken, and things rip. So volatility will increase, and it's already indicating with the ellipse technique. In regards to time clusters, it says to keep an eye out for high probability turning point 813 and also 820. Pretty far from the EIA report, so maybe these dates will work out, but these are the closest dates in regards to the time cluster. Let's Stokes, I already showed you that. Oscillators, you can see how it's kind of, doing some kind of divergence, going higher while price action is going lower. And I have this thing, the MACD is just kind of flat. Elliott trigger indicates that once this indicator crosses the zero line on a fourth, a fourth wave, the probabilities are very high that there could be a possible turning point. So I have a lot of things, telling me and indicating that, there could be a possible turn here. It's just a matter of it happening. And also, there's a one here. It's like a cluster date, which is the 13th. So we'll see how that's going to play out. Maybe doing the Gann box real quick to see what we have from here to here. Yep, so we have some kind of support right here. You can see this 1 by 1, which is a 45 coming down. It keeps whacking it until we could cross there, cross above this level right here of a 209, and then start moving higher. Keep an eye out also for, oops, let's get out of here. The 90th count here, September 2nd. All right, let's go to the next clip. Okay, so this is my master chart, and then after this, we'll do the normal charts I use, and then we'll end this video. So here is the cycle that I am leaning on. This one right here. This one is indicating right here, possible turning point between, you could say, the turning point is actually somewhere around the 5th, which is Monday, or somewhere around there in this little area right here. And everything is looking that it wants to bounce. It looks like it goes up to the 20th, pulls back, 31st, and then goes all the way to like, wow, November. Interesting. I don't know if this is going to play out. This is just speculation, but this is the cycle that's kind of lining up with everything else in regards to a possible turning point, even with the seasonality. This one is a solar cycle. This one bottomed out somewhere around July the 3rd. This is the ones in regards to seasonality. And this one didn't play out because she continued going lower. And it peaked somewhere around the 29th, so pretty much the end of the month. And then it just kind of gets choppy. The computer neural net is indicating a possible turning point on August 1st. And we're already going on August 4th, going to the 5th. So let's see if this is just going late and we came in early with the computer. If not, she has another date here of August 14. So interesting. I've been seeing clusters of August 14 on the Elliott wave chart. I got stuff on the 13 and 14. So let's say it's not this one. And it kind of goes sideways, you know, maybe gets a pop, pulls back, just kind of chopping. Maybe the August 14 could possibly be it, fill the gap, and maybe go up. So I'm just speculating. So these are the dates I'm watching. Well, this is the past. So I'm looking at just a turning point now coming into Monday, Tuesday. Let's see. Bradley model. I don't think there's really nothing there. I mean, we're in a little cluster here, but this is going to be another interesting one, which was going to be August 16. I think that's it. Let's go straight into our last chart, and then we'll end this video. Okay, so this is the last chart. Give you some enough information and data for you to digest. So interesting. Volume-wise, it's a little more to the bulls. Yes, what is that? Friday. That's Thursday. This is Friday. Thursday was very aggressive to the bears, and the bulls showed up finding some discount prices, the dollar store, as I would say. I want to show you something interesting on trend lines using a log scale chart. Look where we are finding support on this trend line. And where is this trend line coming from? This trend line is coming from the February 20 low, pivoting on the 416 low, using a log scale. Look where it found support and bounced. Interesting, huh? I am going to show you a non-log scale chart so you can see if that is duplicated. Yep. Log scale, so on my market profile, I have log scale, and I'm going to show you the same trend lines, same thing. We go over here. This is the same trend line setup and all that. Look at that. Look how low it is. in regards to using a log scale. And that's from using this pivot here and the same pivot here on a non-log scale chart. Look at the gap. So you want to see both of what's going on. And you can see that traders using log scale bought this dip from that angle. Just something as a tip from your one and only. As you can see, nothing on the weekly. No hockey stick setup yet. Volume has been very negative. And on the daily simple glance chart, it's like we kissed this, almost kissed this S1 pivot of what this is really 191. I think the low was 192. So very close. But that's about it. Very negative, and the path of least resistance is to the downside. Let's go to our geometry. Let's look at our APF, and it almost kissed this midpoint from these different angles. And it's just kind of like hovering, trying to stay within this candle of August 1st. If we go into our channels, nothing really there. It's just kind of dropped in open air. FT levels, that's what's interesting. It's already penetrated the $1.91, $1.95. So this is an area I'm watching, and if that doesn't hold, the next FT levels will be 173 to 175. But, and I'll show you because you know me, I'm always thinking about it. Your gap fill right here. Does it get filled this week? It may. 190 to 184. Could, you know, and it could probably be quick. You know, if it's going to do it, I think it's going to be quick, but you never know. But I would guess it would probably be like, boom, and then maybe pop, but we'll see. SO levels. This is the halfway point from the 611 high. And this is why I was thinking my analysis. So I had levels of 192. I think we kissed that, right? 192 was the low. Yeah. So this is one level I had, 192. The next one is 185, 182. And the 177 is the capitulation. So if they want to trap bears, I think this is where they'll probably catch them and then from here bounce. But if it's like, let's fill the gap and let's rip, it'll be 184 to 185 in that ballpark. But this is a sweet spot if it's going to happen. So you just have to place your stops, your alert, trade with, risk management and swing chart. As you can see, we're like even pushing even lower. What's this now? Minus 39.22%. And another date I'm watching will be the 7th, and then last will be the 17th. These are Gann theory dates that I'm watching. And let's see. Maybe it's in this area. But, you know, as of right now, the 8-2 could look promising if it turns from here. Let's go to our midpoint chart. So, in regards to statistics, if you made it this far, this is where I kind of talk about the statistics. So, Monday is a bullish day. Average return by week for the whole week of next week, the average return by week is very positive. So I don't know, maybe this is where we turn this week and we start grinding higher. But on average, that's what it shows. This is a very bullish week. On regards to trading day, Monday is a bullish day. So we'll see how that's going to play out. You know, Sunday night, Monday open. In regards to level, we already kissed our 194 and even pierced it to 192. We got some early signals here on the soaps. Let's look at our monthly. We're pretty far. This is the market profile. The next target will be 183. So that's pretty much your gap fill if we kiss this pivot. So I'm going to leave it at that. I don't, I can't see it going to, because there's another lower one. And I think that's what, 168? I mean, it could. You never know. The Black Widow's weird. But 183, I think this is the gap fill area. So we'll see. Mobiles are positive. Stokes kind of fell apart. Let's see what this week brings. Using our 4 hour on the weekly pivot. So this held right here, this pivot of 192, pierced it a little bit. And we got our low already set in for 192 for next week. So for next week, our midpoint for the whole week is 203. If we could climb up there and hold and not look back and continue, this is the line in the sand for the whole week. So if you're below it, you're on the weaker side. I mean, we've been on the weaker side in regards to geometry, but in regards to levels, we are on the weaker side. If we get to be above and be on this side, this is the bullish side. This is showing that, you know, things are changing a little bit. But worst case scenario, if it's going to push lower, we have a pivot here of 186 and 180 extreme. So keep that on your radar. Mobos are still negative, kind of creeping in. We need to get at least above, you know, this mobile right here. But so far, no signs of reversals, and it's just kind of choppy. But this is the line in the sand. Now for tonight, U.S. Sunday night open, things are mixed. We're in the mobile right here. Line in the sand for Sunday's night, you know, even the U.S. Open will be 197. You can see that it was a tight range on the Friday night session, 202 all the way to 192. And it's interesting. See how it went all the way down and then kind of closed right here. So this is your line in the sand for Sunday. Anything above here is bullish. And let's see what other your max targets. Extreme will be all the way to 207 to 204. Obviously, taking out 202, which is your high on the U.S. session. So we could take out that will be your extreme target, 207. Now, if it's a head fake, it kisses the U.S. high and then goes down. Extreme targets to the downside is 192 all the way to 189 to 186, and you still don't fill the gap if you go down there. But anywhere between 184, 185, that's when you fill it. And maybe let's see if it turns around and rips. Let's look at the square of 9 and we'll end this video. 192. You made it all the way here. Yep, 192, 190, yep, 183. So this is going to be the area if it's going to be chopping around here. And once I think this gets filled, we could probably start trending higher. But if this is the low that we have, and from here it rips, we need to close above 197, close above 204, 205, and get at least a 211. Your midpoint for next week is 203. So that's right here. So it's pretty much around the 180 degrees. So 203, 204. If we could close above that, you're looking really good. And for today is 197. So pretty much is 135 degree right here. So close above that, close above down here, above here is looking good to 211 to 218. And if we hit 218 and fail and go back, I could see it. This could be very a great area for buying on a pullback to get in and then rip to 225. But this is just all speculation, not trading advice. I just want to leave it there. I know I rambled enough, but I wanted to give you some good data. Wanted to give you why I believe this thesis. We just have to wait for price action to confirm it and get volume. We need bulls to show up, and hopefully this data EIA report will come in and we could see something of a great number to confirm all this that I've been showing you today. Well, I wish you the best, successful trading, nothing but the best from myself, and I'll keep you posted on my thoughts on that gas.